the last 15 minutes of the day, but coming directly from trading to the webinar, and I appreciate everybody being here today. We're going to talk about a few things. I'm going to talk about the SPY Super System. It's a piece of software that I'm going to show you that I use. I have it running on thinkorswim. I don't trade on thinkorswim, but it identifies when institutions are in the trades and when they're not. And again, as Oscar mentioned, and I agree completely with him, we trade the charts. We trade what the technical charts are selling us, nothing else. We don't listen to what people say or what we read about or what we see about on social media. We trade what the charts tell us what to do. And right now the charts are telling us that the market doesn't know which way it wants to go. So anyway, we're going to go ahead and get into the presentation. Thank you very much for being here. Again, we'll be looking at the software. We'll be looking at a trading room. I have a live trading room, which I just came from. I'm in there every day from market open to market close. I have an alert service, and we're going to talk about both of those. We're going to talk about the results we've had using this software and the technical analysis I do. And we're going to talk a little bit about Fibonacci candles. If you haven't heard of Fibonacci candles, it's a good way to help you smooth out the price action, identify entries into trades. So let's get started. Again, my name is Dave Wise, and I've been doing this for full-time for about 17.5 years, part-time from before that. So I've been basically a full-time trader for many, many years now at this point. Okay, first thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose, and neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, on we go here. If you have any questions, I'm going to leave the question box open in case you have any questions for me during this presentation. I will try to answer them as they're put out there. If you have a question I can answer, such as some of the software purchases or the subscriptions to the room, etc., you can go ahead and call Rory at 786-732-4656, or you can put your name and phone number in the question box or the chat box, or your not Skype, it's Teams now, a Teams username. I have a Teams a group that I work with, and you can put your Teams username in there, and Rory can hit you up on that. Okay, let's get started here. I know it's been a long day for everybody, but I certainly appreciate you staying for the presentation. I think you'll find it very useful in your trading. The first thing I want to talk about just briefly here is this is called the Compass text alert service. The software that I'm going to show you is called the SPY Super System. It was initially called the Compass when it first started. It's been enhanced since then. We now call it the SPY Super System, and but the alert service is basically SMS text alerts to your phone of high probability trade setups that we find in the trading room, and we send them out to the alert members, and they can put them in. You get an alert with an entry price, an exit price, etc., expiration dates. And we just finished one off today. Yesterday, we took one yesterday with Roblex short, and we took it off today for about 25% profit on Roblex, and that was on an alerted trade. Okay, first thing I want to talk to you about briefly here is what drives the market, what moves the market up or down, or what makes it chop around. And we got two groups of traders. These are retail traders here, these little small marbles. I'm a retail trader. Most everybody in this room most likely is a retail trader. Important thing to understand about retail traders is we cannot move the market. We can't drive the market direction. We can't create trends. We can't break trends. All we can do is trade with the trend if there is one, or not be trading. That's basically what we want to do. What moves the market is right here. These are the institutions. These are the big boys, the folks like JP Morgan, Morgan Stanley, Bank of America, all the big banks, investment banks. But there's four different groups that make up institutions. The investment banks, there is then the mutual funds, such as T. Rowe Price and Vanguard. They're very big and very active with billions of dollars. Then there's hedge funds, and there's hundreds and hundreds of hedge funds, which have, again, more and more billions of dollars to invest and to trade. And then there are things like pension funds, police pension fund, fireman pension funds, state worker pension funds. All of that group is what makes up the institutions. And what we're trying to identify is when enough of those institutions are pushing a stock or an index in the same direction. There has to be there's always, the institutions are always in there. There can be some buying, some selling, what we're trying to identify is when is there enough force in the market pushing a stock up or pushing a stock down based on the number of institutions doing it. That's what we're looking for. Once we can identify that, we want to trade with them. If there is no direction to that based on the institutions, we don't trade at all. All right, we just step away from that. Okay, so that's how we find high probability trade setups. When the institutions are in there trading, we follow along. We're going to take our money from these other retail traders because we have better information than they have. We've got the SPY super system. We can tell when institutions are in there. We get better technical analysis, and we've got better methodologies than they do. So we take money from these folks. We're not going to take money from the institutions, but we want to follow them. Okay, this is it seems like a little off topic here. This is a blackjack table. There's an ace and jack spades, nice blackjack, couple $100 chips. This is a nice, if you like play blackjack, this looks really nice. You'd like to see that. But you're probably wondering what this has got to do with trading. Well, when I first started trading, and I imagine this is what happens when you talk to anybody who you know about trading, or your relatives or your friends, they're going to tell you that trading is first of all, they'll say it's manipulated, you can't beat it. They're going to tell you that it's gambling. They're going to tell you basically you're gambling. You might as well gamble as do that. And there is some similarities between, or there's some accuracy to that. But what I want to kind of explain here is when I was much younger, I made my living playing blackjack. I was what's called a card counter. They don't actually count cards. We track the value of the cards as they're removed from the deck. As the little cards are removed from the deck, and then that gives the player an advantage over the house. As the big cards are removed from the deck, that gives the house a bigger advantage over the players. So what I did was track those cards, deuces through 7 for small, 10, jack, queen, king, ace for big, kept track of that. And by doing that, I knew if I had an advantage over the house or if I didn't. And if I have an advantage over the house, then I would make big bets and multiple bets. And if it went down to where it was in the house's favor, then I would bet the minimum with one hand. I bet, at that point in time it was like $2 or something, but I bet the minimum. So knowing what was going on with the composition of the deck, that gave me a mathematical edge over the casinos by knowing the cards are in my favor. Right? So this was very successful. I mean, you can do this as long as they don't catch you and throw you out, which happened to me several times. I get barred from several casinos, but generally speaking, I still got to play for a good long time, a couple of years, and made my living doing that. So why did I bring this up? Well, trading stocks and options is very similar, okay, in that without knowing what the institutions are doing, you don't have an edge. You don't have any big edge over the other retail traders. You've got to know that. So in essence, they're gambling. So if you're trading without proper information, without proper tools, then you are gambling. And so that's why I brought this up. Now, one of the things to keep in mind here is when you're trading stocks or trading options, I trade mostly options, or you are playing blackjack, there's two things that are required for both of those to be successful. You can have the perfect system in stocks or in blackjack, but you require discipline and emotional control. You've got to have discipline and emotional control to be able to be successful at this, because it's your mindset that can ruin both of these things, right? You lose a couple of hands and you get mad and you start to overbet. Same thing if you're gambling or you're trading. You make a couple of trades, they go against you, you get emotionally involved, you start to revenge trade, etc. So they both require discipline and emotional control. The SPY super system, which I'm going to show you here, is what I call my card counting system. This is the method that gives us an edge over other traders, allowing us the ability to become consistently profitable by following the institutions. And the SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent profits. It's important to understand there can be several stocks at one time that are being pushed up or pushed down by institutions. What we want to be able to do is find the best of those. We want to find the very highest probability trade of those very good trades. So that's what we're going to talk about. Now, in the room and on the alert service, I have a couple of rules to trade by. First thing is we trade the best and skip the rest. Sounds really simple. It's not that simple, but we find the best trades, and if the trades are not high probability, we skip them. This is a kind of an overlooked advantage, because if you don't take a trade that would have been a losing trade, that's just as good as a winning trade. I mean, you basically kept money that you would have lost. So this is very important. And by skipping trades that appear to be a high probability if you're just looking at the chart, but the institutions aren't in there pushing that trade, we can stay out of it. We've got a much better chance of avoiding those, right? And that's what the SPY system does a lot of. Second thing is, our objective is not to make trades. Our objective is to make money. In my room, we don't take an awful lot of trades. You know, some days we don't take any trades. I don't think we even put a trade on today. No, we closed out a Roblex trade from last night, and we had a trade yesterday in the room as well that we closed out for a profit yesterday. But a lot of days we won't have any trades. Some days we'll have 2 or 3. It just depends. And there's a couple of different type trades that we do that we'll talk about. But again, our objective is not to make trades. Our objective is to make money. This is to try to instill in traders patience. Please don't feel like you have to be making trades all the time. You don't. You don't have to have 10 trades a day to be successful. You can have 1 or 2. That's all you need, as long as they're very good high probability trades, right? So over trading is one of the biggest problems that most retail traders have. They'll trade too much, too many trades. They're sitting there in front of their screen. They feel like, I'm a trader, I've got to have a trade on. They'll justify trying to take a trade. So again, our objective is not to make trades. Our objective is to make money. Now, maintaining discipline is very critical. This means learn and follow the process. In other words, in the room, I have the SPY Super System up and running all day long. So I can see, when we look at stocks, I can see if the institutions are in them or if they're not in them. All right, so that's important. And then we have particular strategies and methods that we follow, certain strategies and methods that we follow using the SPY Super System to identify the stocks to take, right? You have to learn and follow that process. It's important to understand what criteria makes a high probability trade. It's not that complicated, but you need to know those and stick to it, which means you've got to maintain that discipline. I had mentioned that already. And then remain patient. And again, this is another critical one. Impatience can be a real killer for retail traders. Again, going out looking for trades to try to force trades, and then in your mind you justify this trade based on something that's close to what you really want to do, you end up losing money. I mean, you can have 1 or 2 good trades, then you get bored and you get impatient and you start taking trades, and at the end of the day, most of your profits have been drained away in these bad trades. Please remain patient. Wait for a stock to come to your support level to get in, or your resistance level to go short. Very important. Okay, now as a profitable trader, obviously we need edges over the other retail traders. Our edges are the SPY Super System software. In other words, what are the institutions doing? Are they in the trade? This is a big edge right here. Trading relative strength and relative weakness. This is not RSI. This is not the relative strength index that you can see on your chart. This is looking at what your stock is doing versus what the S&P 500 or the SPY is doing at the same time. If the SPY is moving sideways and down, and you've got a stock that's stacking green candles, you've got relative strength to the market, and vice versa on the weakness side. This is very important. This gives you a big edge. It's surprising to me that very few retail traders even understand or use this. This is very critical, because if you have a stock that has relative strength to the market and the market turns against you all of a sudden, your stock with relative strength is not going to drop as fast. It gives you plenty of time to get out. So by having that relative strength, you've added to your percentage win. You've added to your likelihood of being profitable on the trade. Trading with the market trend, obviously, you already hear about this all the time. If there is a trend, trends come, trends go. During the day, you may have 2 or 3 different trends. But if there's a market trend, you want to trade in that direction. If the market is having a bullish day, you want to be long. If it's having a bearish day like yesterday, you want to be short. You notice we took Roblex short yesterday. And even though the market gapped up this morning, Roblex was still successful, was still profitable, because we took a stock with relative weakness to the market when the market was weak yesterday. So when the market gapped up this morning and went long, it started moving up, Roblex kept on going down, and we were able to take profits in it. And buy near support and sell near resistance. This is number 4, and this is really important. Don't chase stocks when they're ripping up or ripping down. Wait for them to be near support or near resistance and buy there, or sell there if you're going to be selling near resistance, if you're going short. Buy near support, sell near resistance are really a good rule to live by. Sometimes you may miss a trade. It may take off and it may not come back again, but most of the time, stocks just don't keep going in one direction. They'll come back and test support or test resistance. Okay, the compass system, which is now called the SPY super system, it identifies high probability trade setups by identifying when the institutions are in the trades and when they're not. When they are, we can see by the chart that they are, and we can then make our decision based on the fact that we're trading with the institutions. The compass system, or the SPY super system, does this by identifying when the institutions are driving the move. It does this by looking at some fairly complex data, momentum, money flow. There's several different things that it looks at, trend, etc., to come up with this, but it's going to display it in an easily identifiable format. It's visual, so that you can see colors, which is going to tell you whether the institutions are in there or not. And this makes it really, really easy for inexperienced traders, even though if they don't know technical analysis or I can't read price action, they can tell whether the stock is a good trade or not a good trade. Okay, and this is how we get an edge over retail traders. We're only taking trades that are being driven by institutions. They're trading stocks that have relative strength or relative weakness, and we trade in the direction of the overall market, right? So again, our trades will be supported by the institutions. The stocks will be outperforming the SPY, and they'll be moving in the direction of the overall market. If you can follow just these three things right here, you'll be ahead of about 95% of the retail traders in the world, and there's millions of them. Okay, now the SPY super system, as I'm going to show you the system, I want to go over something. I'm going to go over the results that we've had in the room. This is closing in on 4 years. It'll be 4 years at the end of December. We started in January 2022, and we haven't had a losing year. Of course, we only had one losing month last year. This year, I don't think we've had any losing months, and we've been profitable every year significantly. But those good results, I want you to understand that it's coming from the SPY super system. The SPY super system is the critical element, right, in finding and trading the highest probability trades. The SPY super system software is the engine that drives our results, right? Remember that. This is what's driving the results. The ability to identify when institutional players are driving a bullish or bearish move, and when they're absent, is a key factor in pinpointing high probability trade setups. This is the function of the SPY super system software, and it's the critical component. Okay, very important. I am on YouTube every day. Rightline has a YouTube channel. I'm on there every day from 11:30 to 12:30 or so, sometimes 11:40 to 12:40, but I'm on there for an hour each day. We get to see the room. You can hear me talking to the traders in the room. You can see our charts up there. You can ask questions. Okay, I'm going to go over this kind of quickly. The most common mistakes that retail traders make. I did a video on this, but these are really important, and these are all mistakes that I made when I was learning in my career. Not considering the current market conditions when you take a trade. Really important on whether it's a 5-minute trade or an intraday or daily trade off a daily chart. Make sure you're looking at what the current market conditions are. If the market is choppy, then you should be taking very few trades and you should be taking quick profits. If the market is trending, you can take bigger risks and you can stay in the trade longer. But you've got to look at it and see what it's actually doing. Over trading, we've talked about this, big one. Taking too many trades, always wanting to be in a trade. Trading your P&L instead of your technicals. This is a huge, it's one that I think is very important. A lot of traders will try to make a determination if their trades are working or if their strategies are successful based on their P&L. So they're getting in and out of trades based on their P&L. If they're in a trade and it looks good, it goes green, they stay in the trade, turns around, goes red, they start to panic, it goes back up, it turns green, they dump the trade and take a small profit and leave. Not because the way this trade was set up has gone bad. It hasn't broken down through support. It's just they get out because their P&L went from green to red back to a little bit of green and they get out. That's emotion. You were trading out of fear when you did that, right? So that's very important not to trade your P&L. I don't even look at my P&L during the day. Trading what you think instead of what the price says. I'm going to talk about this a little bit. Over leveraged, if you get too much risk on, I think everybody knows about that. Not using the daily chart for swing trades. Somebody sees a nice 5-minute chart, they take the trade long, they don't look at the daily chart, they don't have any idea whether the stock is bullish or bearish. Big mistake. Lack of patience, another important one. Forcing trades, again, this is related to lack of patience. Attempting to pick tops and bottoms. This stock can't go any higher, I'm going to short it. This stock can't go any lower, I'm going to go long. You don't do that. You shouldn't do that. What you do is, if you think a stock is topping out, wait for confirmation that it's reversed and headed back down. You've got to have confirmation of those reversals into another trend, okay? Not waiting for confirmation to enter a trade, same thing. Needs to be able to confirm that the support's going to hold or the resistance is going to break, etc. And fear of missing out. Those are the 11 most important ones, I believe. Trading what you think instead of what the price is. I'm going to talk about this right now for just a quick second. This is a quote from Stephen Hawking, and he says the greatest enemy of knowledge is not ignorance. In other words, not knowing anything is not the biggest enemy of knowledge. It's the illusion of knowledge, right? This illusion of knowledge is if you trade something, you have a trade bias based on what you read somewhere, you saw on CNBC, you saw in a social media post on X or on TikTok or somewhere that this particular stock was going to go up, or this particular stock was going to go down, or the whole market should be bearish. This is illusion of knowledge. Back here in the spring, when the market went down quickly and up quickly on the tariffs when they were put on and taken off, there was a huge amount of bearishness sentiment in the market. And for a couple of months after that, everybody, all these gurus were saying the market should be going to correct, it's going to go down, it's bearish, and people were taking trades based on what they thought was going to happen and based on what they told them, right? They went short. They went short for May, June, July, and guess what? The market went up May, June, July. It just kept marching higher and higher. They were in trade short, getting clobbered because of their bias, because of what they thought they knew. This illusion of knowledge was causing them to take bad trades, stay in bad trades because they didn't want to be wrong, thinking that eventually they were going to be right, and they finally had to give up the ghost. They lost their money. Not only did they lose the money on the shorts that they took, all right, but they also lost the opportunity to get into trades long. We were basically long during this whole period of time. Once those tariffs came back off, we were long that whole time, even though we were hearing everybody go tell us go short, go short. And believe me, I was dealing with this every day in the room with everybody wanting to go short, and I was trying to keep them focused on going long. We're trading what the market is doing, not what the market what we think it should be doing. So again, remember this. It's the illusion of knowledge that's the greatest enemy of knowledge. No, trading something that you think you know when you don't know it. Okay. A question here. Hey, Ed, the system works. You've tested and tried it. My main enemy to success has been myself. Yes, Ed, I appreciate that. Ed has been with the system for quite a while. Does a lot of intraday trading, fairly quick intraday trades, and has had very good success doing that. Thanks for that, Ed. I appreciate that. Now, on the SPY Super System, it's color-coded, as I had mentioned, all right? So you've got 4 colors. You've got green. Green indicates strong bullishness. You've got blue. This indicates a bullish trend. It's not very strong bullish, but it's a bullish trend. Red indicates strong bearish, and a yellow indicates a bearish trend. Okay, so this is the color scheme that you're going to see on the charts themselves. And the chart is on Thinkorswim. It's going to be Thinkorswim. It's also works on Ninja, but I use it on Thinkorswim. Now, I don't have to trade off of Thinkorswim. I can trade off of I trade off of Tradier. You can trade off of any trading platform that you want. Okay, so I'm going to show you a couple of slides. This was the SPY Super System a few weeks ago. I've been updated it since then. So I'm going to move along to the updated one, but these are the things on the chart that we're going to talk about, right? And this, by the way, is some scanners here. That we have multiple scanners to be looking for relative strength, relative weakness, potential swing longs. So this is the older chart that we've modified. And we also added this is the current market momentum. We'll talk about that on the new methodology. This is also the same chart, but notice it doesn't have the other indicators on here. This is just for the current time frame that I'm going to show you. This is for folks who just want to trade off the 5-minute chart. In other words, intraday, fairly scalpy types trades. All right, so the updated SPY Super System chart that we've done here, again, I optimized it for clarity and precision. I added the 8 exponential moving average to provide improved signal confirmation and trade timing for both entries and exits, which we'll show you. So this is what the new layout looks like. I dropped you're not going to see the scanners out here, but they're there. I just enlarged it so you can see it more clearly. All right, so here is the SPY Super System. This, by the way, is still the market internals. This shows you what the overall market is doing on a 5-minute basis right now. And that means when I say the market, I'm talking about all of the New York Stock Exchange stocks. All right, are they bullish, trending up, like this case, or they could be trending down, or they could be very bullish or very bearish. This tells you what the current condition is of the overall market, all 6,000 stocks or so. Right now, on here we've got indicators. This is going to tell us what the institutions are doing. This is called a modified Laguerre. This is an oscillator. And oscillators, most oscillators measure divergence and they measure momentum. This measures momentum only. It's modified because we don't have divergence in here. Divergence, I don't think is very effective at all. So we went with straight momentum, and this is the actual indicator. But what we're looking for on a chart is we're looking for, this is the current time frame momentum. This tells us what the institutions are doing with this particular stock on this particular time frame. This happens to be 5 minutes. So what's going on a 5-minute basis, current time frame. This is multi-time frame momentum. This is 3 different time frames. This is the 5-minute on a 5-minute. This is the 5 minutes, the 15-minute, and the 45-minute on a 5-minute time frame. What I'm looking for, if I'm just trading intraday 5-minute charts, is I'm looking to just use the current time frame. Is it green bullish? Notice how it went bearish here. You see how the stock dropped down? Right there, when it went bearish, that's the institution selling. Right, then multi-time frame. For a swing trade, you need to use multi-time frame and current time frame together. Both of these need to be either bullish, green or blue, or bearish, red or yellow. You wouldn't be taking a swing trade on a daily chart if one of these was bullish and one of these was bearish, because you don't have confirmation or enough information to tell you that the institutions are actually in it long. And then this is a long-term trend, and this gives you an overview of the trend for a long term. And it's useful if this will match your other indicators. It doesn't have to, but if it does, it gives you a little bit more confirmation of that direction. Right, now up here in the 5-minute, this is the 5-minute chart. Up here, there's a few different indicators that we use, or a few different moving averages that we use. This is the VWAP, the volume weighted average price. If you don't have that on your chart, on your 5-minute chart, you definitely should have this on your chart. Okay, very, very critical that you have the VWAP on your chart. Volume weighted average price. This is all the institutions use this. Every institution uses a VWAP when they're getting in and getting out of positions. The next one you see here is a 15 EMA. This is a 15 EMA of an EMA. It's a smooth EMA. That's another exponential moving average. And then I've recently added the 8 exponential moving average right here, the white line. So you've got 3 different lines. These are support resistance levels that we use to get into quick trades on a 5-minute chart. We use either the VWAP, the 15, or the 8. And the 8 and 15 can be used in conjunction with each other. If the stock breaks down below the 8, a lot of times it will support on the 15 before it breaks down. So when it breaks down to the 8 and the 15, that would be where you could take it short. Okay, and the VWAP as well. If it breaks below the VWAP, that's an entry for a short. Breaks above the VWAP, that's an entry for a long, as long as your current time frame momentum is indicating that institutions are long if you're going to go long and short if you're going to go short. Right, so that is what makes up the SPY Super System. It's just color codes to tell you if the institutions are in there or not. It's calculating lots of information, a lot of data to come up with this information, but it makes it easy to see. Right, you can see here that they were buying pretty much here on this 5-minute on the SPY. All right, now just I want to cover quickly a couple of trades we took using these charts, just so you can see how they're in action before I get into a little bit more detail. This was a trade we took on NVIDIA back in 1024, a long time ago. But what I want you to see here is what we're looking at here on a 5-minute chart is this is what we're interested in. What are the institutions doing on a 5-minute basis? Okay, so it's this price is above the VWAP, which is bullish. The 8's above the 15, which is bullish, and then it slides down here. But you notice how it touches the VWAP and then bounces. Now look what the institutions are doing right now. They're selling. They were buying here. They're selling, selling. Then they switch to buying as it goes from red to blue. This is the institutions coming back in. What's happening at the same time? The price is bouncing off the VWAP and going through the 8 and with a moving up here. And one of the things that we have on the SPY Super System is these arrows. These are called pop symbols, or pop out of the box symbols. This tells me that compression is breaking to the upside, and on the blue ones, compression to the downside. This is another indication this is a place to take the trade right there. This is where you would take the trade. It goes from bearish to bullish. It breaks through the VWAP and the 8, the 15. You take it right there. You ride it up. As soon as it starts to lose momentum, you take it off. See how it went back to yellow here? That is your trade for the NVIDIA. Take it long here, get out right here. Buying calls on that thing is very nice. And again, this is a 5-minute chart, right? So this is just an intraday trade. We also do a lot of swing trades, right? And I'll show you some of those. This was a trade in the SPY short, okay? See how it's moving sideways. Here's the 8 right here, the white line, and the 15's of the red line, and the VWAP is the pink line. Here's where the stock breaks below the VWAP and the 8 exponential moving average right there. Okay, it breaks below it right there. See what's happening here on the current time frame momentum? It's going from buying, which is green, to selling, which is yellow. This is where the institutions just started selling it. So you take it right there. This is the entry we took. And then you ride this thing down. And as long as it stays below the 8, because that's basically your closest resistance, is you just ride this thing down and stay in as long as you want. Now, when it starts to pop around like this, you could get out. But notice they're still selling it off. You can see the amount of red on here. The institutions are selling it. I mean, there's no question about it. Okay, this is another trade in the SPY. This was a long trade in the SPY. You can see it goes from selling yellow to blue, right, for buying. Pops out of the box right here. You take it right here, and it goes up, right? Same thing. And this was a Tesla trade, an early morning Tesla trade. Pops above the VWAP, goes to buying right here. Take it right here as it stays above the VWAP. As long as it stays above the volume weighted average price, you stay in. Starts to flatten out right here. Take it off right here. Notice it goes back to yellow here. They're coming in to sell. You're up. You take your money. Okay. And this was a swing trade we took not too long ago. This was in NVIDIA. Notice that this was a swing trade. So we need the current time frame and the multi-time frame to be aligned. They're both green. Everything's green. And the institutions are obviously buying like crazy. We've got the trend moving up, but I'm not chasing it here. I'm waiting for it to come back down. And you see how it comes back down to the green line, which is a 15 EMA. And this pink line, by the way, is a VWAP. You do not use this on the daily. I'm going to have this thing removed from the daily chart. But it comes down to the 15 and bounces off here. This is what's called a PBO, in my opinion. Or in the room, we call it PBO, a pullback opportunity. A chance to get into a trade after it pulls back and hits support. This is where we take the trade right here. Notice this green candle as it bounces off the 15. Institutions are buying it. We picked our spot. In other words, it was bullish here, but we didn't want to chase it. We wanted it to come back. Remember I said, buy at support, sell at resistance, be patient. Here's where you're patient. You take the trade here, and we ride it up here, and we get out right here on this little spike. That's where we get out, and it's still bullish. Okay. This was a trade in SMR that we did right after earnings. Here's the earnings. Went from selling on the earnings day to buying the next day. We take it right there on this bounce. We get in at 513, out at 515, 56% profit. If you've invested $2,000 in this in options, you would have made $1,170 on this. I use $2,000 as my baseline for how much to put into each trade, just so when I do my specs at the end of every month and every year, I've got something I'm using a consistent number. Doesn't have to be that, obviously. You can trade whatever you want, but I just use that so I can judge month to month. Okay. Let me turn off my news feed here. Just hold on a second. Okay. And this was Wendy's. This was another short one. Again, daily chart goes short right here as it goes from blue to red. We take it here. We wrote the same day. Boom, in and down. Notice the selling right here, selling across the board. Okay. This is just something I threw in here, just a little humor. This is a person who's trading with emotion, trading, maybe doing a FOMO trade, fear of missing out, jumping into a trade after it's already pulled up a lot and now it turned around and heads back. Now they're freaking out, or they just looked at their P&L on a trade and it's red. Now they don't know what to do. They don't have a methodology. They don't have a system. They don't know if the institutions are in the trade or not. This is what a normal average retail trader feels like when they're trading, right? We don't want to feel like that. This is what we want to feel like. We want to feel like we have control over what's going on. We feel confident in the trades that we're taking. We know that over time the trade's going to work out. Our win rate in the room is between 85 and 90%, month after month after month, year after year after year. And so we have great confidence in the trades that we take, even when we have losing trades, and we do. Everybody has losing trades. Okay, process precedes results. I'm going to talk about the criteria that we use to find trades. But what I'm going to point out here, it's very important to understand what the process of buying high probability trades is, and memorizing that or internalizing that, because that's what you're going to do. That is the process. Learning how to take the best trades. If you're focusing on your P&L without having a solid process to follow, it's going to end in failure. You've got to be having a good methodology and strategies that are defined. High probability criteria for trades, for stocks that you enter, and you use those and learn those and stick to those, right? Because you can take a bad trade and it can go good, can go profitable, and you can take a good trade and it'll go against you. The P&L is not telling you whether it was a good trade or not. Okay, this is the high probability trade setup funnel that we have, that I use. This is a checklist we go through. Is the daily chart bullish if I'm going long? Is it bearish if I'm going short? For swing trades, this is important. The daily chart must be bullish if I'm going long, must be bearish if I'm going short on a swing trade. On a 5-minute trade, it's not as critical because I'm going to be in and out fairly quickly. Then once I get into a swing trade off the daily, then I try to use the 5-minute to try to find my best entry off of like the support level, like a VWAP. A trade with a trend, both stock and market, if there is a trend. If the stock's bullish, the market's bullish, obviously you want to trade it bullish. Then the SPY super system. This is the deal breaker. The SPY super system must align. If you're going long, the SPY super system has to tell you that the institutions are in the trade bullish. If you're going short, it has to tell you that they're in the trade bearish. Very important, right? Without that, the trade is I'm not going to take it. Now, if that works out, then I'm going to look for the best. If maybe I got 5 trades here that look good, I'm going to look for the ones with good relative strength or relative weakness and focus on those. And then I'm going to identify a support or resistance level and try to get in right at that support or resistance level. If I want a 5-minute chart, I'm looking for a bounce for a long off the VWAP, the 15, or the 8 exponential moving average, right? Or a break through it as it goes through there. I want to buy very close to one of those levels, the VWAP, the 15, or the 8 exponential moving average. And that is the high probability trade setup funnel. This is what we look for. This is where the high probability trade setup come from. Like I said, this is not the very complicated, but it's important to follow these things. It's very easy to get sidetracked when the trading is going on during the day and read about something or just decide you want to get into a trade and you ignore some of the criteria that you need. Okay, inside the room and on the alert service, these are the kind of trades that we take. We take straight calls and puts. Obviously, we had a straight puts on Roblex last night. I do straddles and strangles. This is a non-directional trade that you're just looking for a big move up or a big move down. Don't care which direction, as long as it makes a big move. It's called a straddle and a strangles, either one of those. We use debit spreads using weekly options expiration. This is a way to take a trade long or short, limiting your cost because you're doing a debit spread. You're buying, for example, a call and selling a call at a higher strike price to reduce the cost of that trade. And I usually weekly options expiration. It's going to expire this week for any trade that I take like that. We do time spreads over earnings. I just did one tonight on CCL. They have earnings tomorrow. This is a non-directional trade. This is just looking for CCL to move inside of its expected range tomorrow. I don't care which way it goes. I just don't want it to move more than what the market makers are expecting. So if the market makers are expecting a 10% move, I just want it to stay under 10%, either up or down. Because what happens is with the earnings, the market makers jack up the price on the premiums of the puts and the calls. They jack them up to cover themselves because they don't know which way the stock's going to move and they don't know how far it's going to move. So they do this by increasing the premiums on the puts and calls by using volatility. They add volatility. Once the earnings come out and they know where it's going and they know about how far it's going, the volatility comes out of the trade, and the time spreads are a calendar spread that is the point of it is to capture that volatility crush when the earnings come out, and that's what we're trying to do on CCL tomorrow morning. I have a weekly ATM strategy that I have on right now on KSS and Coles, and it sells puts every week against a stock that's neutral to bullish. We sell puts every week to capture premium, and we take a longer term debt, longer dated long put way out in time, like 6 or 8 weeks out in time, to protect ourselves in case the stock turns against us. Very, very easy strategy to use. Doesn't take much management. It's very forgiving. Really an excellent strategy as long as the stock you pick meets the criteria. And then we do credit spreads to capture premium over a few weeks. And then we do what's called the SPY Super System methodology trades. This is where we take trades in the room off of a 5-minute candlesticks based on the indicators I was showing you earlier. And we do this for the SPY, the Qs, the IWM. You can use it for futures, or you can use it for any stocks. Right? This will work on any stocks that it uses. They'll use the SPY Super System criteria on the Thinkorswim platform that I showed you. That's what we do for this. These are very quick trades, and I can't post these in the room because they're too fast. But I do teach the methodology. I have a video on it, and a lot of people with Ed that was talking about how good it has been successful uses this. This is what he uses all the time. All right, the alert service. It's designed for day trades and short-term swing trades. This is not an investment letter. It's designed for traders who can't watch the market all day. It puts out real-time alerts on highest probability trade setups, which are stocks that the institutions are in, and the market internals are also in agreement. And then we do some technical analysis. So that's what the alert service is. All right, this is my equity curve for this year, I guess. Yeah, for this year. This is based on trades we took in the room at $2,000 a trade. These are not trades that I took that I didn't post. This is just posted trades in the room. All right, now I'm going to talk a little bit about Heikin-Ashi candles. Is there anybody here that knows about Heikin-Ashi candles and uses them a lot? Or is there anybody here that has never even heard of Heikin-Ashi candles? Hey, Sarah, you, okay. All right, use them a lot. And they're very, very effective. But you know it from my room. Okay, thank you very much. Heikin-Ashi candles are a different construction of price movement. I mean, that candlestick is nothing but price movement, right? So we're going to talk about that right now. These are Heikin-Ashi candles. It says it's on the British pound, Japanese yen. Doesn't care. It doesn't matter what this is. This works on any stock. This could be gold. This could be Tesla. This could be Microsoft. This could be pork bellies. It doesn't make any difference. All right. Rudy, the posted trades in the room, the same as the alerts that are sent out. We take trades in the room that I don't alert on, right? And there's a reason for that. If I take a trade that's very quick, even though I post it, in other words, I expect to be in and out inside of a half an hour or something like that, maybe 45 minutes, I'm not going to alert on it because it's not going to give the alert members enough time. But anything that's going to be like most of the day or overnight, anything overnight, time spreads like the time spread I'm doing in CCL, things like that, those would be sent out an alert unless it's too late in the day. I don't send out alerts after about 3:35, 3:40 because it's not going to give the alert members time enough to get them. So the alert service doesn't have as many trades each month, but the win rate of the alert service is basically exactly the same as it is in the room. And you're just not going to take as many because I can't alert on every trade if it's going to be too fast. And some of the trades we take sometimes are very speculative, and I'm trying to keep the alert service to only get the very best trades, right, that we send out. Okay. All right. So these are Heikin-Achi candles. A couple of main things you're going to remember. You want to remember. Bearish Heikin-Achi candles have flat tops. See the flat top right there? Flat top, flat top, flat top, flat top, flat top. Maybe remember, these are made up of 2 candles at a time. Flat top, flat top, flat top, flat top. Right? See, notice this interesting thing about Heikin-Achi candles. You see how the beginning of this candle starts in the middle of the previous candle. Every single candle of Heikin-Achi candle starts in the middle of the previous candle because of the way these things are calculated. Right? So this is a bearish Heikin-Achi trend right here. Flat top candles like this are very bearish, Heikin-Achi bearish candles, right? And they come down and they start to get smaller, and they're still flat tops. Bullish Heikin-Achi candles have flat bottoms. Flat bottom, flat bottom, flat bottom, flat bottom. Notice the flat bottoms. This is a bullish trend. This is a bearish trend, okay? What we're looking for in our trading, how do I send alerts? By text code or through Discord? A couple of ways, Matt. I send them, the alerts go out by SMS alerts to your phone, but they're also posted in the Discord room. Okay, that is we have a couple of professional traders in the Discord room that post these trades, as well as posting charts of their own and some you know, they put out information on sectors and economic information, etc. Yeah, that's how they're done. Okay, so what we're looking for, I mean, Heikin-Achi candles are going to help identify trends. You can see them much more smoothly. You're not going to get as much noise in the candlesticks as you do with regular candlesticks. But the key way I use Heikin-Achi candles is to find reversals back into a trend, right? Looking for what's called a Heikin-Achi reversal candle. We're going to identify here as a Heikin-Achi reversal candle. So here's a bearish trend. Now, let's assume we're looking for this stock to come down to a support and then bounce, and we want to confirm that that bounce is going to continue. In other words, we're looking for confirmation of a return into the original bullish trend, right? So here's the bearish trend. We're getting bearish Heikin-Achi candles. What we're looking for is a bullish Heikin-Achi candle that reverses that direction. Now here's one here, right? Flat bottom. We get a couple of dojis. We get a flat bottom, right? So this is technically a Heikin-Achi reversal candle, a bullish Heikin-Achi reversal candle, right there. Would I take this? I wouldn't. And the reason I wouldn't is because when you get your Heikin-Achi reversal candle, you want it to be about as big as the candles that created the original trend, right? It's much more difficult to break a trend to the upside when we're breaking it with little candles. So I wouldn't take this. Now, it would have worked. You could have got in and made 3 or 4 candles out of this. But this is what I'm looking for here. See how this big trend down, then it moves up, comes back down. There's another bearish Heikin-Achi reversal candle here and here. Here is my Heikin-Achi reversal candle to the bullish side, right there. Flat bottom, big green candle to the upside. That's a Heikin-Achi reversal going back in the original trend. This is where I would take it, right there. Now, an interesting thing about Heikin-Achi candles, let's say these are 5-minute candles. If you're looking at a regular candle, you really don't want to make a determination as to whether that candle is going to work or not until after the candle closes. You want to, because it could reverse back again. Once you're about halfway into the cycle, if this is a 5-minute candle, once you're about 2.5 to 3 minutes into that 5-minute cycle, this Heikin-Achi candle is 99% likely to maintain that flat bottom, right? So you don't have to wait for the candle to complete as a Heikin-Achi candle to get into the trade. You can into the trade during that Heikin-Achi candle. And here's your Heikin-Achi reversal trend. Confirms right here, because the Heikin-Achi candle, because it's made up of 2, the Heikin-Achi candle itself is a confirmation of the reversal into the trend, right? It's really important. So notice how this worked. Get in here, boom, 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 keeps going up. One right after another. Get a couple of wicks and tails, but still green. This is where you would get out. Starting to lose some momentum. You lost momentum here. You're out of the trade. That's the trend you took. And see how nice and smooth it looks on there. That is your Heikin-Achi reversal. These are what the Heikin-Achi candles look like. And you can put them on any kind of platform. You just change from standard candles to candlesticks to Heikin-Achi candles. I'll show you in in the SPY super system in just a bit. Okay, so here's what you take from that, what we just talked about. Bullish Fibonacci candles have flat bottoms. Bearish Fibonacci candles have flat tops. Bullish Fibonacci candles are identified by flat top Fibonacci candles, followed by flat bottom Fibonacci candles. They don't have to be right together. There can be some doji candles in between. And bearish Fibonacci reversals are identified by flat bottom candles, followed by flat top candles. All right, that is how you use Fibonacci candles to watch the trend, and also how to find Fibonacci reversals, because those are critical. This is what we just talked about right here. Here it is. This is a little bit different setup on it, but let's assume that you were in the stock was you wanted to take it. It was long for the day. This is the VWAP, for example, right here. This blue line. You want to get into this trade as a long trade, but you want to confirm that it's going to go up. So it comes down. You see how it's Fibonacci candlesticks, bearish, bearish, bearish. You get a Fibonacci reversal here. You're still below the VWAP. The pink line, the blue line's the blue dotted line is your VWAP. Let's say it. So the stock comes down and it bounces here with a Fibonacci reversal, another Fibonacci reversal. This Fibonacci reversal went through the VWAP. That's where you would take the trade right there. That's right there where you would take the trade. You get another Fibonacci candle, another Fibonacci candle, then you get a red candle here, right? A Fibonacci reversal, but it does not break below the VWAP. Then you go right back into Fibonacci candles again. So this is the trend you would be riding, all right? See how smooth that is. Flat bottom candle after flat bottom candle. Then you're starting to get these wicks and tails. You get out right here. And that's the profit that you made on that. That's a very big move right there in that candle. Do I pay any importance on Fibonacci continuations? Yeah, I do. I mean, Fibonacci continuations, and this would be a Fibonacci continuation right here. Okay, because you get flat bottoms and flat bottoms, then you go to a flat top, right? So that's basically a Fibonacci reverse, a bearish Fibonacci candle, but it's definitely not a reversal because it's so small. And then you go to another Fibonacci flat bottom here. That's a Fibonacci continuation candle. Anything that's a Fibonacci candle gets created inside a trend after you've got a candle that is not a bullish Fibonacci candle, is a Fibonacci continuation. These are all Fibonacci continuations, and yes, they tell you that you're still in the trend. What do I mean that the Fibonacci are made up of two candles? I'll tell you in just a second. I'll tell you how they do that. But there's two regular candles. The way that it's calculated, and I'll show you how they do that to come up with a Fibonacci candle. Could you consider that an entry? Yes, you could consider it an entry there. But what you'd want to like if you took an entry here, you'd want to kind of think about how far am I away from my support level. In other words, if I get in here and it reverses on me, I get tiny losses. If I get in here, I've got to determine how far am I away from the level that I would want to exit on if it goes against me. How much downside risk do I have? You wouldn't want to be taking it way up here. All right, you're too far away. Too far away. You're chasing it. All right. So what's the advantage of these Fibonacci candles? First, they smooth out the price action, reducing noise. Okay, makes identifying trends much easier. Improves identifying confirmation of trends and trend reversals. This is the big one. And it helps identify potential exits when the candle bodies shrink on reversal occurs. What are the dotted lines, Maz? They're not. The way I use this is I'm just saying if these are probably Bollinger Bands, but what I'm trying to show you is if you have a chart and you've got a support level right here that you're going to take it. This happened to be I mean, if you were trading off of Bollinger Bands, you could use this, but I'm assuming that like this is the VWAP. This is just an example. That is not. I'm not telling you that these are any particular indicators. Okay. Okay. Now a couple things here. I think I have a calculation of this somewhere. Yeah, the way these Fibonacci candles, somebody's asking about this, the way the Fibonacci candles, what they do, you have high, low, open, and close on two different candles, and they take the first one, and then they take the second one, and they take those high, low, open, and close information, and they merge them together to create one candle. That's why there's two candles. that make one. That's why they always open in the middle of the previous candle. Now, I wanted to show a couple charts here, and I'm going to show a couple of live charts in a minute as well. But this is an Uber chart. This is way back in 23. But what I'm showing here, this is, if we look at May 1st, this is a standard. These are standard candles. These are not Hikinashi candles. And you see right here in May 1st, you get this move up, then a gap up, then a gap up, and a nice continuation move here. But tough to trade off of regular candlesticks because you're getting big gaps. So let's go to a Hikinashi candle on the same thing on Uber, looking at May 1st. Right, so here's May 1st. Right, so here is your Hikinashi bearish candles coming down. Here's a Hikinashi reversal, bullish reversal right there. See how big that is relative to these? That is where you would enter the trade. Right there on May 1st, you would take this trade off that Hikinashi candle with a nice flat bottom. And then look at how nice you move up here. It goes up, moves up, moves up. See, in the middle of it, in the middle of it, in the middle of it. And here's where you would be getting out. That is your Hikinashi reversals. Now, a couple things to notice here is on May 1st, on the regular candlesticks, you had a gap. See the gap? No gaps. No gaps on Hikinashi candles because it's using two candles to create that one candle. So you don't see any gaps on Hikinashi candles, but it's much easier to trade from something like this than it is something like this. All right, and it's much easier to stay in it as well. All right, so those are Hikinashi candles. All right, I'm going to this is, by the way, this chart is based on TC2000. This is a charting program that I use, which allows me to do charts and some additional scanning. And then I use this SPY super system to tell me whether the institutions are in the trade or not. But this is a TC2000. Okay, so I'm going to look at some of the live charts here, and let me look quick at a couple of scans for today because I'm looking to try to find I'm going to switch to the to my TC2000 chart right here. And I'm going to pop a couple of trades in there. Okay, this is Kava. Okay, CAVA. All right, so this is a regular chart. If I switch over to Hikinashi candles on here, which I'm going to do right there, there's a Hikinashi candle today. This is today. This is right at the end of today's trading, right? So this is Kava. Here's a big downtrend in Kava. You see how these pink candles, how they are? Now, I'll explain to you that on my TC2000 chart, I color my candlesticks red and green and pink and blue. What the difference between a red candle and a pink candle is, a pink candle is a bearish candle, it's a red candle, but it has Bollinger Bands expanding, which means the stock is breaking out of compression. So it tells me that I've got some force to the downside, and blue tells me I have some force to the upside. All right, so here's Kava. There's a Hikinashi candle right there. You see the flat bottom? After it's actually a continuation. I had some Hikinashi candles here, a long compression and a break above the 8 right there with Kava. That's a nice bullish trade for tomorrow. Now let me show you something on Kava. Let's look on Kava over here on a SPY super system. All right, so let me go to the daily chart. All right, so I go to a daily chart and I got to put up Kava on here. All right, what do I see on Kava right here? Is it tradable? What's the current time frame and multi-time momentum telling me? Yes, it's going from selling to buying. The multi-time frame is buying. This tells me that I can buy Kava tomorrow. If the market is giving me some bullishness, you could take Kava as a long entry for tomorrow. And if I switch this to Hikinashi, and this is how you do it, you go from chart type, from candlestick to Hikinashi. There's my Hikinashi reversal candle right there, or Hikinashi continuation candle right there on this chart. All right, so let me see if I can find a couple of others. Put this down for a minute. This is WSM, that's another one. You see the Hikinashi reversal candle right here, continuation actually. And I'm just going through and see if I can find some decent ones. Market was pretty awful today, by the way. Let me just show you something. When we're here, let's talk about the market for a minute. Let's take a look at the SPY. Is this S&P 500 chart, right? This was a candlestick right there. It was Tuesday. Moved down, went down to the 50-day moving average, which is the red line, bounced off of it. This is yesterday, a horrible day. This was a brutally bad day for trading. Well, not for trading short. We took Roblox yesterday, but this was a nice, and look what we did today. We pretty much traded inside of that candle right here, bouncing off the 50-day again. So we don't really have any indication of which way the market's going to go. As I told them in the room today, if the market closes, if the market trades below the 50-day moving average and stays below there tomorrow, then you can go short. If it goes above these two lines right here, which is the 8 and 15, and closes above there, you can go long. Right now we're in the middle. We are in no man's land right here on these trades. All right, so I wanted to show you a couple more Fibonacci candles. So basically what we do is we find Fibonacci candles, then we look at the SPY super system to see if the institutions are indeed in that trade. All right. This TAK, that's a nice Fibonacci candle. Let's switch Fibonacci. There it is. Fibonacci continuation on TAK. Another good one there in Dawn. Pretty cheap stock, but a big Fibonacci reversal candle, very large. You notice that when you typically get a blue candle, you get multiple blue candles, and this is off of my TC2000 chart, right? But if I'm looking at Dawn, and I go ahead and look at that on my SPY super system, all right? I just go and look at Dawn here. Is that good? Yes, it is. It's got blue and blue, telling me I can take that. So that's how I determine whether Fibonacci reversal candle on the daily chart is a tradable or not. Does it have the institutions in there? All right, and I'm sure there was a few shorts today, as a matter of fact. Let me pop that up again. Let me bring up the TC2000 one more time. Right, this PNW, Fibonacci, this continuation of the Fibonacci right there. VNet, Fibonacci reversal there. Another one here, Pepsi. Another one here. There was going to be a bunch of them today. This is Sarepta. This is a pretty good one. This is a pretty good one on Sarepta. So if I go over to the SPY super system and I look at Sarepta, does Sarepta qualify? Can I short Sarepta tomorrow? Whoops. Can I short it? I cannot. See how the SPY super system tells me that the current multi-time frame momentum across multi-time frames is still bullish on here. We don't have agreement on the multi-time frames that the institutions are selling us off, so I wouldn't take it. Okay, so that's how that works. Now you're looking for now. We'll take a look at now. All right, there's now. This is the daily chart, and now this is pretty ugly. You can see the Fibonacci reversal candle right here. This actually was a pretty good entry on it. Notice it went yellow here, and here it is today on regular candlesticks. That's Fibonacci, and if I look at TC2000 on now, there it is. Definitely bearish. So this was obviously it's got something there. I don't know if that's an earnings or dividend, but this is a big downtrend. And what you'd want to be looking at on something like this is you want to be looking at your regular chart and determine how far is this thing away from support and resistance. But if I look at the bottom of this candlestick, you see the bottom right there? That's going to tell me that it's broke down below it today. I would want to see it below there to take it short tomorrow, right? But it definitely is qualified as a short on now. CTNT, that's another one. INSG is another one. So I can find a lot of these to be Fibonacci reversal candles. So that's what I look for. And then when I find them, then I look at my my SPY super system to make sure that they qualify to be taken short. I mean, that's the whole key. If they're good shorts, do they have bearishness on the multi-time frame and current time frame momentum? In other words, are the institutions selling these? They certainly are. And the trend is also that way. So that's how you use those. Dividends, okay, good. PayPal looks like a good short. Yeah, I think I looked at PayPal today. There's a lot of good shorts right now. But PayPal is actually putting in a doji candle today. On one of the things I do in the room is I do what's called high volumes, resistance and support levels. That's one right there. That's something that likely that level is likely one that the institutions will adhere to, and you see how they did today on that. So I wouldn't take it until it broke below there. Anyway, I'm not going to get into a lot more technical analysis on those. I just wanted to go over the Heikin-Ashi candles so you can see how they work and how to use them in your trading. Okay, so those are some Heikin-Ashi candles. So again, you can see how they smooth out the trend. They take the noise out of the trade. They let you find reversals into the back up into an original bullish trend or an original bearish trend. And you can use them on 5 minutes as well to trade intraday trades. If you're looking for an intraday reversal off the VWAP, you can take a Heikin-Ashi candle. And if you get a Heikin-Ashi candle, you get confirmation that it's confirmed going back into that trend. Okay. Okay. Now I'm going to talk about the results we've had in the room, and I'm going to show you some of the results over the past couple of years. I'm not going to go through them all. There's a lot of them, but I want you, a couple of things I want to point out. In 2023, using $2,000 per trade in the room produced 60,000, a little over 60,000 in profits. Okay, a little over 5,000 a month. In 2024, we did about 55,000, about 4,500 a month, a little lower. And the reason for this, because what's the market like? You get a trending market during the year, you get a lot higher profits. If you get a choppy market, you got to take fewer trades, and you got to take the profits quicker. So it comes down a little bit, but not much difference. In 2025, this is up through September, 47,765, 5,307 a month. That's better than what we did back in 2023. This is our best per month average so far since I've had the room open, right? But it's pretty consistent. It's pretty consistent. These are some trades, and I just kind of point these out. I guess I'm kind of proud of these, but this was back when the tariffs went on and tariffs came off in April. They put the tariffs on, and then they took the tariffs off because the bond market spiked. They couldn't keep them on. This is the trades we had on. We had 4 trades on in the room and on the alert service. We had all 4 of these on. They were all bearish. We had all bearish trades on. And AVGO, we get in for $75 a contract. We get out for $1.04, 39%. We get into Nike. We get in for $285 a contract. We closed it on for 216% profit. This one we got lucky on, I think, because we were in it short, and 2 days later they announced the tariffs, and the tariffs were going to be 39% on Vietnam. Vietnam is where Nike makes all its product. It crushed the stock. I mean, absolutely crushed it overnight. And as soon as it gapped down the next morning, we took it off. We didn't wait around. Sarepta, we get 78% profit and 25% profit at NNE. We had these 4 trades. That's the only trades we had on in the room and on the alert service, and all of them had great profits. And the SPY was down 10% in 2 days while we had these on. Right. So I'm just, it's anecdotal, but I'm proud of these particular trades we had on. This was June this past year. I was out on vacation for a couple of weeks, so we didn't have a lot of trades. 10 wins, 1 loss, 91% win rate. That's pretty high. 37.90 in profits. Here they are. These are the kind of profits you're going to see most of the time. 20, 23, 25. This is the range that most of our profits per trade are going to stay in. Please don't be expecting you read about these 300, 400, 500% winners. Listen, you can't trade like that consistently and be profitable, right? It just doesn't work. But you're going to read about it all the time, and you hear webinars about it with people standing in front of Lamborghinis about how much money they make. Please. Okay, so that was June. In July, these are the trades. We took a lot of trades in July. I guess I was rested up from my vacation and took a lot of trades. But see the percentages again. This is what I want you to see. And we do have some losers. You can see the losers here. 32%, 52%, 21%, 23%, 10%. These are the kind of profits you're going to see trade after trade after trade. We had Sarepta, which was good for 166%, but that's an outlier. This is mostly what you're going to see on every trade. July, 30 wins, 3 losses, 91% win rate. Again, really high. And this was really a big month. Again, this is an outlier. 16,000 in profits that 1 month is an awful lot. But we had a big month, and it's proud of it, of course. But this is not. Please don't get it to expect this kind of profitability on 2,000 per trade every month. It's not going to happen. August, 20 and 4, 84% win rate, but almost 6,000. September, again, I pushed some of the trades in here so you can see them again. And here's the percentages to see how they stay the same. We take some losses, 4,700 in profits, 84%. This was January through September of this year. 155 wins, 28 losses, 85% win rate. 2,000 invested in each trade produced 47,765. Again, just as I showed you a minute ago, 5,307. Right? These are the profits. Remember what I said early on. The results we get are based on the fact that we're using the SPY super system to tell us whether the institutions are in the trade or not. All right, I'm not going to keep going. This is back to January 2024. Again, every month except for one, last year was profitable. I'll show you the losing month. All right, so here's the profits. See how they stay the same. 90% win rate in January, 92% win rate in February. This is very high. I can't consistently produce a 92% win rate. I can consistently produce an 85 to 90% win rate. I cannot produce a 92% win rate consistently. It's very, very, I don't think, it may be possible, but not for me. May, 88% win rate. June, 86% win rate. The alert trades actually had a high win rate in June. I had 75.90 in the room. The alerts had 83.16 because the alerts missed out on one of the losing trades. July, 85%. August, 89%. September, my only losing month last year, right? Eight wins, 5 losses, an embarrassing 62% win rate. And we lost 1,786. In August, we made 45.35. In September, we lost 1,786, 295 in the room. And in October, we jumped up to 7,400 in the room and 6,000 on the alert service. So we kind of swamped those losses, but I want you to understand there will be probably a losing month here and there. I think I've had maybe 2 in 4 years, but they do occur. I mean, they do occur, and you're trading with the market. Market is very dynamic and it's very unpredictable. November 14 and 2. So we already kind of covered these. This is January through March through April. We covered these already of this year. I guess we didn't, but you can see 84, 89, 83, 81, 45,000, 7,800, 3,800, 3,100. That's the kind of profit just that you get. Okay, so that gives you kind of the profitability of what you're going to see in the trades that you take. Let me take a sip of water. Okay, so on the alert service, what you're going to get, this is what an alert looks like. You're going to get, this was the Nike one. This first section right here, that's what the first alert's going to look like. It's going to get the date. It's going to show you the ticker symbol, Nike. It's going to say to buy the April 11th 67 puts. Right, what's that telling you? Here's your strike price, 67. Here's your expiration date, April 11th. So you're buying the April 11th 67 puts, and this is what you should pay for it, $285. That's the whole alert. Now there'll be another alert to come out once they decide where we're going to take profits. So you see this alert with this added to it, sell order for $9. Then when they were sold for $9 on April 3rd, there's your whole alert. Now there could be additional alerts if I adjusted it from $9 to $8.50 or $9.50. You'd have another alert on that. Okay, that's what the alerts look like. How do we achieve these results? I think we know right now. We're tracking the institutions, right? How are the institutions trading? We're going to take those. We're going to watch when the market internals are bullish, and we're going to trade only the very best ones. And again, how does the super system identifies this? Triple screen, momentum, trend, also has money flow built in there as well. But this is the main thing that we're using right here is momentum without the divergence in there. Okay, momentum. A lot of people misunderstand momentum. They think if they see two or three green candles in a row that the stock has momentum, but that's not how momentum is measured. Momentum is measured by looking at the let's say 2 5-minute candles. How close was the close of this candle to the high of the candle? As the candles are produced, if the close of the candle is getting closer to the high of that candle, then that's momentum. That's how momentum is measured. It's the close of the candle is moving up closer and closer to the high. In other words, there's less and less selling as the stock gets closer to the high. Okay, so again, we're going to look at some more charts. Then we're going to wrap up this. I don't want to take too much of your time. I appreciate what you've all done here, how much time you spent here today. I appreciate that. I'll be willing to answer any questions you might have. But this was the SPY. We looked at this one before. Here is your SPY super system. Market internals, VWAP, 8 exponential, 15 exponential. This is what we use on our 5-minute trading. On the daily chart, we switch over to, we do use the 8 and the 15, but we also switch over to the 50-day moving average, the 100-day moving average, the 200-day moving average, all of those moving averages. Now, here is your key indicators. Current time frame momentum, multi-time frame momentum, long-term trend. All right, this is what we use. This is how we trade intraday, and on swing trades, we use multi-time frame and current time frame together along with trend. Okay, and again, this is the other template. If you get the SPY super system, you get this template and you get this template. This is just for folks who want to be able to just trade off the 5-minute. They don't really care about these other indicators because they're just trading off the 5-minute chart. So we have an indicator. We have a format like this, basically a template for you like this. You get them both. You can flip them back and forth. But just so you know, if you're just going to do that, it kind of isolates it a little bit better. All right, so here's the SPY super system trade that we took. This is a SPY super system Heikin reversal candle on the SPY. Right, this is where I get in. Right, you see, notice it went from buying to selling on the 5-minute chart right there. This is where I get in. You see the weekend at tail. You see the flat top Heikin reversal. I take it here and I use this red line, which is a 15 EMA, as my stop. And I just ride this thing down, ride this thing down, ride this thing down. I don't even know how far it went. Notice as the selling just continued and continued and got even more pronounced. Right across the board, they're selling the Qs. This was the Qs. So we took a big trade in that one right there. These don't happen all the time. A lot of times you get a lot more chop and you're in and out of them just in several candles. Again, the SPY super system, this is when I talk about the SPY super system, what I'm talking about is the methodology of trading off of the SPY super system on a 5-minute chart. And this is for like SPYs, Qs, IWM. And these are the trades that I took because I cannot post these. I can't alert on these. These are very quick. But these are the results I had from last year, 2024, when I first started this. And you can see how many trades I took in August. 56 wins, 6 losses, 2 scratches, produced good profits. I have not had a losing trade with this. But the important thing to remember about these is you're only going to be in one trade at a time, and they're going to be very quick. So this is for traders who like to make intraday trades, not necessarily hyper scalping, but fairly quick trades. They're going to last 1, 2, 3, up to about 10 candles, right? As long as the trend continues, right? And this was November last year, December last year. It's very strong results. And this was the last quarter last year. This was the SPY super system trades methodology, just trading off the 5-minute chart. Again, 840, 831 in October. Now this is the room trades. If you were in the room, you would have. This is about what you would have made if you took all the trades. This I can't post. This I do post. These totals are not included in each other. These are completely separate results, separate methodologies, and separate results of profits. They're not included, right? So that was the room. Is November 9,300, 7,300 here, and December 10,500 here, and 4,500 down here. So that was the last quarter of last year with the SPY super system. When I say SPY super system methodology, I'm talking about trading the SPY super system off a 5-minute chart only. Okay, the room trades can be mostly 5-minute charts or mostly swing trades. There can be a lot more swing trades using the daily charts. Okay, so here's the SPY super system right here. This was a big one, $220 profit per contract. See how we get in right here. Again, see the VWAP right there? Notice how it broke above the VWAP, and you see that the institutions went from selling to buying right here, current time frame momentum. That's what we look for on these quick trades. It's another quick one there. And again, I think you can kind of see it here. Again, this was it off the new format with just the simple current time frame momentum holding on there. Get in here, get out here. Right? Same thing here with the new layout. Just to kind of go over the layouts, this was a 11/15/24. This was $120 profit on the IWM, the Russell 2000. See that breakdown pop out of the box? The stock's breaking below the VWAP. with a compression brake. Take it right there. Are the institutions selling it? They absolutely are. We take it right down here and write it down. This was before I put the actual gear indicator on there. This is the current time for momentum right there. Okay, and here's some high probability trades. These are trades that we take in the room that are going to be, these would be trades that we posted, right? This was for ALGN right here, a line. This was meant to be a swing trade, but we get in right here. You see how it went from selling, from buying to selling, green to yellow, and we got a pop out of the box symbol. This is where I took the trade right here, and it was going to be a swing trade. I took some puts, but within an hour we were up 51% on those puts in the line. So we took the trade off. I didn't hold it overnight. You could have, but I didn't. If you can't hold it overnight because you're under PD2 rules, PDT rules, any trades that you get that come to the alert service are meant to be used on a daily chart, which means you can keep them overnight if you need to. Okay, this was urgent. This was when we took here. Again, institutions buying. We bought it right here as the stock compressed, popped up. We took it again. The VWAP should not be here. That pink line going to go away eventually. NVIDIA, I showed you this one already. This was the pullback opportunity and a bounce right there. This was SMR. We showed that one as well. Here's Nike. Here's the one I told you we made 216% on. Here's what we took it. Notice that the institutions are selling the heck out of this thing, right? Selling across the board. So we take it here. Actually, we actually had a profit that day. I didn't take it, but we could have. And then we stayed in, and it kind of moved sideways, but it's still below the, right now, below the 15 exponential moving average. And there is the tariff announcement, and there's where it went, and that's when we get out, right there. Right there where it opened in the morning, we were out of that thing for 216%. Sarepta, same thing. Sarepta, we rode this down as well. Nice profits in this. Are they selling this? Anybody can look at this chart and see that the institutions are selling it, right? You don't have to really do much delving into, don't have to go into much detail to see that. This was HIMS. This was the one we took. All green, took it right here, wrote it up, 25% profit. I made it 269% on a run that I left on, but I didn't post that, and I didn't include that in any totals, but I got lucky on it. Okay, so that covers the charts, covers the SPY super system, it covers the alert service, it also covers Fibonacci candles. I tried to cram this in there, as quick as I could. I have, limited amount of time to try to do this, but I kind of want to get you a flavor for what we teach in the room, because I'm in the room every day talking, except for taking an hour for lunch. I talk all day long, talking to traders, going over the trades, going over the charts. They give me charts that they want me to look at. We look at those, we analyze them, we do technical analysis on them, we look at the SPY super system. All of that is done in the room. So there's a lot of education going on. I try to be very focused on trying to help traders become consistently profitable, because listen, trading is a tough business. Believe me, if anybody tells you it isn't, they're lying to you. Trading is tough. If you got the tools, and you got the expertise, and you got the proper strategies, you're going to be head and shoulders above other retail traders where we take their money from. Again, you're going into a battle here with these other retail traders. It's a war you're fighting with other traders. I mean, that's what it is. And if you've got the SPY super system to tell you if institutions are in there, you've got good technology like the SPY super system, if you've got good technical analysis, good strategies, and I have a lot of strategies, and I have videos on them all that are looking for very specific criteria set up, you're going to be head and shoulders above the other retail traders. You're going into battle with them with basically jet fighters and big bombs, and they're coming at you with pea shooters and pop guns. It's just not the same thing. You'll crush them. All right, so there's all the strategies that we use. I've talked about that. I'm not going to go ahead and repeat them all. And these are the offers from Rightline. These are really good. This is on I got two different offers. One for the room and text alerts, and one for the SPY super system, which is the software. Right. This is the options room and text alert service. And by the way, those in the chat box, Rory, I believe, has posted all of those links. Yeah, he's got links in there for the SPY super system and the text alert service. So this is the options room and text alert service. Again, they're 50% off on the annual membership, 50% plus 500 off on the lifetime memberships. And these are the codes you would use for that. Save 50%, save 50, save 50 plus, save 50 plus 500. These are the coupon codes. So you can get a 2-week trial if you want. 2 weeks is not very long, especially in this crappy market, but 2 weeks will give you the trade alerts. They'll give you the trading room, and you'll get a chance to look at the videos that I did. About 32 of them now on the different strategies we use, how we use the indicators, all of the strategies, time spreads, weekly ATMs, straddles, triangles, all of that. After the trial is up, if you don't cancel, you can cancel anytime, of course. It rolls over to $396 a quarter after that, right? Or you can do an annual on the room and text alert service at 50% off, $11.95 for a year of the text alerts and the trading room, right? And the options, masterclass they call it, but basically it's my videos, the training videos on how to trade this stuff. And then you also get in the private Discord chat room. We have 2 other professional traders where you can be in the Discord room, or you can do a one-time payment. This is a one-time for the alert service in the room and forever. So you never have to renew. Options: you get the trading room, you get the alert service, you get the master classes of the training, basically, and the Discord room. All of that for $24.96, $11.95. These are really good deals for the rooms and the alert services. If you want to just try it out, this is what you would do, but you're not going to get these kind of deals. Okay, and then we have the holiday special on the SPY Super System and the scanners. This is a software, right? This is a software. Software is an annual membership of $9.98, which gives you the SPY Super System software that we talked about, and you'll get all the updates to it. Any updates we make, you get the scanners. You get a month in the trading room, so you can give you a month to try out the trading room, see what you think about it. You get the market scanners. You get my again the training videos, and they'll get an installation of what's called white glove. But Rightline will take over your machine, and if you don't have Thinkorswim on there, you can download Thinkorswim for free. They'll take over and they'll put the SPY Super System. It'll look exactly like mine. They'll put it right on your TOS platform, and then you'll have it. You can trade from that. You really don't, if you do that and you look at the videos on how to make the difference, use the different strategies and how to trade the indicators, you'll have about the same thing that anybody's got. You just won't have the experience. All right, so that's the annual membership right there for the SPY Super System and the scanners. And this is the one time, 50% right here, coupon code 50% for the annual, 50% plus save 500 on the lifetime SPY Super System software, lifetime access to the trading room. All right, lifetime access to so you get the trading room for forever when you do this, which is as opposed to 1 month. Over here, you get it forever. You get the scanners, of course, that come with it. You also get the master classes or the training videos, and plus you get it installed on your machine for free by Rightline. So you don't have to worry about any technical issues trying to get the thing on there. All right, so those are our offers. One thing I'll point out here is I did an analysis on return on subscription investment, not the trading investment, what your return has been on the subscription. So basically, I put $1,600 as the max. That's based on the quarterly. Average trade size of $2,000 per trade. Assume you take all trades. The historical results every year has been 40 times your ROI. 40 times ROI over what you've actually paid for the room access and the alert access, right? 40 times the subscription cost, not over 4 years, but every year. 40 first year, 40 second year, 40 third year. This subscription has consistently paid for itself many times over, and it's got a higher ROI, return on investment, simple math, and proven results. And of course, we always have the disclaimer: past performance is not indicative of future results. Trading involves risk, and individual results may vary. Absolutely, we do have losing trades, so just be aware of that. So those are your options. You can go into the chat here, and you can hit one of the links down there. You can call Rory at 786-732-4656. He'll talk to you about these. And again, look forward to seeing some folks in the room on the alert service. And if you're in there, just shout at me out, because I answer every question I get in there every single day. So I do spend a lot of time on that. All right, everybody. So thanks so much for coming today. I appreciate it. I hope you have a great weekend. If I don't speak to you between now and Christmas, I hope you have a great holiday and a great Christmas and a great New Year and coming year coming up. And then we're going to have a fairly slow trading between now and Christmas and New Year's before things start to pick up again. So we use this a good time to go back and analyze our results, maybe tweak our trading a little bit, use it to improve ourselves as far as trading is concerned. All right, everybody. Have a great evening, and thank you so much for being here. I appreciate that, and look forward to seeing you in the room.